Guys, good morning. November 12th, 2019, Tuesday. The market is just not doing a whole lot. Basically, we're having a fight between move 4, which is a bullish reversal continuation type move, and a move 11, which is the top. The last couple of days, we actually had consecutively move 4 type behavior. So very interesting to observe that every time you see the market in the last week actually gap lower, anywhere from 5 to 15 points lower on the S&P 500, it actually grinds itself higher from there, which is a characteristic of move 4. Now, in the mix of that, every time the market has gotten to a certain level of about 3,092, 3,097 level, it drops, creating a move 11. So it's a real fight going on right now between the bulls and the bears, even though it looks like there's really not a whole lot going on with the markets. Now, remember this, that low volume actually kills directional trades because the stocks are just not moving a whole lot. So target smaller moves. So clearly, if you're getting a move 4 type behavior, if the market opens, it makes sense to actually, based on the market is giving us right now, to be buying the dip. But if we're getting to a certain level, like we are looking to try to get to a certain level this morning, that makes sense to short. So overall, we're pretty much looking to short the market with the exception of the biotechnology sector. So we got some cool trades coming your way, but just remember, with low volume, target smaller moves. If VIX keeps side trend between 12 and 14, target smaller moves unless it's like a crazy earnings play. Now, this is the trend that I just described. When the market ends up opening higher, 10, 15 points, it typically surrenders the gains over the last 7 to 10 days. So it makes sense if we pop, bounce intraday in the morning at the market open, it makes sense to short. If we're opening down, it makes sense to actually utilize a simple strategy, just buying the damn dip. Now, the ultimate question of the week, guys, will NVIDIA pop the semiconductor bubble this Thursday? NVIDIA is going to announce earnings on Thursday night. We are going to lay out all the details and how we're going to trade it on Thursday morning. And with that said, NVIDIA could actually cause the semiconductor stocks to tank. Now, ideally, we're going to be looking for a setup where NVIDIA could actually bounce after the earnings report, followed by huge profit taken because the stock is up quite substantially. If that is the behavior we're going to notice, this is going to create some lucrative opportunities over the course of the next week or two when some other semiconductors are going to be reporting earnings. Now, do not overstay your welcome on some of these trades, meaning you do want to swing trade some of these moves, but again, you want to get in and get out at the right times, opposed to targeting 400 or 500 percenters, target 50, 100, 150, 200 percenters right now, because this market is just not moving a whole lot until we see a break higher on the VIX, at least above the level that it hesitated to break above yesterday, which is a level of 13.5. Now, without any further ado, guys, the cool trade this morning, this is just a quick, this is definitely not a swing trade. This is just a quick day trade on a correlation type trade between AAP and AZO. Rita has got some volume. This is the stock that could actually produce, in comparison to the rest of the market, some substantial moves today because it's got a couple of strong catalysts going into the stock today. ICUI, we're still short. It's bouncing this morning. We love that opportunity to come in and short the hell out of Sage Pharmaceuticals and a couple of others we're going to cover. So, but focus on this. As far as the market overall, guys, this is a multi-top formation. Okay, the highest level of the lucky number we indicated a few videos ago was 3097. Every time we get closer to here in the last 48 hours, we failed to break above that level of 3092, 3094. So this is a multi-top formation. Now, on the same token, every time we get to a level about 3072, 3074, we're failing to break lower. So we're stuck in this range. Now, the cool thing about this, guys, is this range is so narrow, the market is not going to be able to maintain this narrow range for a long time. So maybe if all the stars align perfectly going into Thursday, Friday, we will break out of this sideways trend, which is going to create some phenomenal opportunities. So take it easy on trading the market today. Do not put a ton of huge positions on. trade a few contracts, make a few grand, no big deal. Okay, just focus on some killer opportunities. If we break out of the sideways trend, the VIX could spike. We could see some tremendous opportunities if NVIDIA disappoints the semiconductor sector. So going into this Friday, just make sure that you focus. Friday could be a huge day, especially following the NVIDIA earnings. So with that said, guys, week 5, typically week 5 is a lot busier when it comes to the earnings season, but we do have some cool things coming up. We got Walmart, Wix, WIX, we got a few things, but not as busy as looks like next week is going to be. So AAP, Advanced Auto Parts, guys, instead of actually shorting this one, I would rather short AZO at the open, AutoZone, in expectation of a quick bounce. So AAP shares, why is the stock even down? Man, I'm looking at this right now. It beats on earnings. It beats on revenues. It beats on everything, guys. But one most crucial thing it did not beat on is the forward-looking guidance. So the stock actually guided some numbers down going to the next quarter. And I think that's actually going to cause AZO shares to wake up to the downside here. Especially, I'm going to show you the chart. And I think it's going to be a perfect entry point. Now, AAP down so far all the way from 168 to about 160 level pre-market. If it bounces to about 162, 164, this would be a good area to come in and short the thing. Now, if initially when the market opens, it keeps dropping, beware, about 151, 152 level, that's going to be an area where they are likely to buy the dip in this stock. As you can see, the multi-top formation has been going on in this one for quite some time. So far already down to about 160. So we don't have a ton of room on the short side. So if you're doing this short side of the trade, buying puts on this one, just make sure once it hits 151, 152, get out of the trade. Do not overstay your welcome on this one. So AAP, basically what we're seeing is a fast drop to an area of 151, 152 will be followed by institutions actually buying the dip. The reason why we think AZO could be a much better trade, and again, this is a quick flash top trade, in and out type situation. We think that AZO is hitting the level which it's failed to break out of, and it's likely to fail to break out of this level again. Remember the video we've actually posted, last video on AZO was around September 22nd when the stock was trading right around here. We said it was going to drop to a level of 1,065. Well, we actually left a little bit money on the table here, dropped to 1,050, and since then the stock has recovered to about the same level. So this level right here actually makes perfect sense, guys, to enter the trade on the put side, because this poor guidance in Advanced Auto Parts is likely to at least create a short-term move lower in the AutoZone shares. Now, your exit shouldn't be, again, you shouldn't be expecting the thing to drop back around here to 1,050, not crazy like that, but a reasonable $10, $20 move at the open, like within the first 10, 20 minutes, is likely to take place. So get ready, trade it quick, buy stuff in the money. Do not look to, 300-400% gain. Just look to quickly 50-100% return in and out, buying in the money, done. This is quick and easy trade, guys, this morning. MDGL. Now, this one has no reaction so far pre-market, but actually, it is a competitor to ICPT. Now, if you guys remember in the last few videos, I've shared some charts on ICPT where the stock was flying from 60 all the way to 500 bucks. This is a competitor. They work on a treatment for NASH and ASH, which is, a huge potential as far as the marketing and the sales opportunities for either company. Now, since they've been working on this, MDGL actually announced some good results, FDA approval stuff last night, but the stock has failed to move. We think that if right at the open, they're actually going to sell a little bit, it would be wise to buy the dip on this one and buying 105, 110 calls. Now, if it clearly breaks lower on strong volume, okay, if you see like couple 100,000 shares going on the way down, then it wouldn't make sense to buy the call. So watch out. If it only drops on a share of like, 20, 30,000, 50,000 shares, it doesn't have a whole lot of volume typically. So that tells you that, if it's only dropping on 20, 30,000 shares right at the open, then this trade lower is likely to be reversed, especially if you got a positive catalyst. But typically, we see this pharmaceutical stocks would already rocket substantially higher from there. Maybe this one's got a little bit of a delay action going on today, but this could be a very good trade on the call side at some point today, guys. FDA plus earnings on this one. So Rita, we said focus on the trades that have some high volume coming into them. This is going to be the one today as far as the volume. Rita has done incredibly well over the course of the last couple of months. The stock literally doubled, almost tripled. But apparently, analysts think one of the analysts raised the target price to $328 on this thing this morning. So we're waiting for a possible initial drop to about 200. So right now, pre-market as I'm recording this, trading in the range between 209 and 215. We think there's a pullback likely to an area of 200, and this would be making sense to actually buy the dip on this one in the sense of buying this in the money calls, guys, 200, 205 calls. You will see some huge spreads on this. The spreads typically actually diminish if you get the options closer to the money. So those are not going to lose value. You're going to be able to, if you decide to sell them at a smaller profit, it should be no problem. But ultimately, this stock could revisit 233 at some point today. So if you're getting in at 200 and strong volume comes to the upside and they keep pushing this thing higher, this could be possibly a $30 size move, which in this one could not just double but triple, possibly a little over triple your investment, depending on exactly how you're able to purchase this 200, 205 strike call. So this could be a highly beneficial trade with some meat on the bone right here, guys. ICUI, guys, this pop is happening in super low volume. Yes, the company's sales continue to deteriorate. The company's earnings continue to deteriorate. But because of the low expectations, low expectations, the stock is actually able to beat the earnings that the analysts were projecting. We think they are going to come in and sell the hell out of the stock at these levels of about 180, 190. If it bounces to 195, this is definite great entry opportunity in the put side. Multiple times we've seen ICUI when it opens after the earnings report. It doesn't move a whole lot. All of a sudden, later in the day, we see some huge action coming. So expect a pop followed by a drop in this one. Basically, black candle is likely to be formed on a one-day, one-minute chart. November 11th, Monday was yesterday, guys. We had another move forward. This is exactly the behavior I was trying to describe to you earlier in the early slides. Is basically we drop after a huge gap down. The market basically drops. And then the market grinds its way higher. This is actually a bullish characteristic, even though the market remains negative for the rest of the day. The two-day sequence is 4-4. Basically, the market refuses to give up here. So if you look at the move forward that we had just a day ago, the move forward characteristic here is such that it's of much larger magnitude. You see a fluctuation between 3,092 and 3,072. So this is like a 20-point move here. Yesterday, we had a much smaller move from about 374 to about 3,086. So the size of the move was diminished. We're going to see if what this really tells us, guys, is the bulls are getting exhausted. Typically, you don't see such huge of a gap. I actually took my time to draw this out for you because I thought it was so important. So we actually finished the day on Friday at 3,092, but then we opened at 3,074. Typically, in a low VIX environment, when things are just barely moving like 5, 10 points, you don't see these big gaps. And then after we get this big gap, yes, the market does immediately pick itself up and move itself higher, but look at the magnitude of it. We haven't actually been able to touch that 3,092 despite of all the bullish action yesterday after we opened lower and continued higher pretty much for the rest of the day. Now, this is important because as you can see, I got a bigger size 4 here. I've got a smaller size 4 right here. This tells us that things are not as rosy as they actually are, or not as green as they are for the bulls. When you get a smaller 4, diminished size of the move, followed by, preceded by a bigger size of the move, that tells you there's actually less bulls at these levels. And if there's less bulls at these levels, then who is remaining to buy? this market. So if less people are remaining to buy at these levels, then the pullback is much in the making. So we are still expecting a pullback from this level, guys. 5-day sequences 2, 7, 11, 4, 4. Clearly, if you were to take a look at this, it's just a multi-top formation, right? We're expecting a high probability market possibly popping here back to this level, 3,092, 3,095, 3,097. If it does get there, we want to short the hell out of it because the next move we're expecting is lower from there. So short the bounce, basically. We've pointed that out, that there's move 11 type characteristics that are basically progressing every day when we look at these multi-day type charts. Next market move for today is basically an 11, which would be a characteristic of the market popping and reversing. Move 6 would be characteristic of the market selling off in the second half of the day. And move 5 is basically the market is just not going to do a whole lot, just going to be keep fighting. Spike in the VIX yesterday, even though the VIX did finish the lows of the day, we didn't have a huge spike right at the open, and then the VIX just continued moving lower. But it did finish higher than the prior day. So even though it doesn't seem like the VIX is doing a whole lot, overall, this was a bullish move for the VIX, despite of the market pretty much grinding higher the entire day. Now, VIX is holding the gap up from yesterday, pre-market so far, about 5 a.m. today, guys, November 12th. VIX is failing to close this gap up, which is actually rather bullish. We've got triple bottom going on the VIX so far pre-market. So waiting for the VIX to actually hit 14.8, 14.9 over the course of the next few days for us to get substantially bearish in this type of market. Now, buying puts around the retest at 3,092, 3,097 this week and next week expiration. We definitely want to give these options a little bit more time here, guys. Between 2 and 4 p.m., we are looking for a moderate sell-off of a higher probability of a moderate sell-off, guys. With that said, stair step, don't jump all in. Wait for Thursday, Friday for some really killer trades. Trade wisely, modestly. Don't jump all in at none of these trades unless you see some huge volume in a particular stock. Guys, let's roll. Make it an awesome day. I'll catch you on the next trade soon.